Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to show why all this prognosis of the talking head experts saying that we're going to have probably a double bottom or a retesting of the low of the markets is not likely. There is not going to be a test of the recent lows. The next likely target is likely to be at the 50-day moving averages. As we have seen in this market reversal, we had a morning star signal, which is one of the 12 major signal reversal signals, with a gap up and a close above the T-line. The T-line being a very strong trend indicator. Very simple rule. If you see a candlestick buy signal and a close above the T-line, you're likely in an uptrend until you see a candlestick sell signal and a close below the T-line. In this case, it turned right around with a very strong McMuffin pattern, a morning star signal followed by a doji sandwich. A doji sandwich infers there's going to be more upside. You combine that with a morning star signal and more upside potential, that's double confirmation that we're in an uptrend. Followed by a J-hook pattern. J-hook pattern usually illustrates that wave 1 and wave 3 are going to be the approximate same, which in this case, the measurement of this move takes you right up to the 50-day moving average. What does that imply? That implies we probably have 2, 3, 5, 7 trading days more to the upside. Then we watch to see what happens at the 50-day moving average. But the strength of all this combination right here tells us right now we're not going back to test the lows. Now, once it gets up here and maybe if something eventful in the world happens, yeah, it could pull back. But right now, the candlestick analysis shows us that investor sentiment is moving positive after the big reversal and now the second reversal, the J-hook pattern. This was demonstrated more powerfully in the NASDAQ, where not only did the NASDAQ do a Morningstar signal, but our best friend, doji gap up, which is one of your strongest reversal signals. A doji gap up, Morningstar signal closing well above the T-line, followed by a doji sandwich. Now a J-hook that started back up with a kicker signal. What's the implication again? Wave 1 and wave 3 are probably taking you up into this area to the moving averages before we have to watch to see if there's a trend reversal. This also tells us we probably have a few days at least of more upside. Knowing the direction of the market and knowing which signals are the strongest allows us to get into positions early with the idea that here's our upside potential. Right now in this market, with investor sentiment turning around, there are opportunities that are already producing 25, 30, 40, 60, 80% returns. What's our potential target? The 50-day moving average. We'll see when to take profits if and when at that area, telling us what type of signal is forming. Very simple scanning techniques put all the probabilities in our favor. If we know the direction of the overall market, we can do simple scans to find which sectors are the strongest in this new uptrend. Then we can break it down to see which stocks in that sector are acting the strongest. So when we did our simple scans a few days ago, it showed that the housing stocks are starting to come back. That's already produced a 25% profit, and with the idea that we're probably coming up here to hit the 50-day moving average, which would also fill this gap. So not only does it get us in early, but it helps us identify what stocks or what positions have the strongest potential. Same analysis on the big stocks like microchip. There's your best friend signal. Nice strong uptrend. Looking for the 50-day moving average to be the target. When you can see this very plainly, that the investor sentiment has turned dramatically positive and we can calculate where our target is, this makes for excellent profitable trades for the option trader as well as the stock trader, because you can now do spreads, telling you want to sell this one and maybe buy this one and leverage your money even more. So using candlestick charts allows you to take advantage of big price moves without having to listen to all the talking heads, experts' rhetoric. This allows you to understand there's not going to be any testing of the recent lows, not on this trend. It might sometime down the road, but if you sit waiting for the second bottom, you're going to lose a heck of a lot of money that's being produced as investor sentiment turns around dramatically. Thank you for listening. We are going to be doing a special session tonight showing why or where the strongest sectors are and how to get into those trades with the optimal entry strategies. So come join us. Thank you for listening.